On today's hot sheet, I'm discussing housing inventory, Americans' favorite long-term investment, and Barbara Corcoran on the best time to buy a home. Today is Monday, May 12, 2025. I am Byron Lazine, and the hot sheet starts now. Okay, live from Naples, Florida, back in my Naples studio. Pleasure to be here with you as we kick off this week of the hot sheet. Let me know in the live chat which market you are tuning in from, wherever you may be. You're probably waking up today saying, well, if I bought stocks on April, 4th or 5th, maybe I'm selling some of them. I already have some dialed up because we'll go live when the market goes live. I'm already selling a few. Hopefully right now here as the market did open just now. Dow has surged. Sorry about that. I'm so excited about my Fidelity app. I forgot to hook up this other monitor. But the Dow's just surged over 1,000 points here on market open. S&P up, NASDAQ's up. It's all up. It's up. Why? Because the Treasury Secretary went over to Geneva and met with Chinese officials. And all of a sudden we wake up Monday morning, maybe you saw it late last night, and there is an agreement in process here with China. Thought that one would come last. Didn't think it would go UK, China. Thought it might go like UK, Mexico, Canada, that kind of deal. Nope. It went UK right to the big one. The big threat, potentially China. So not a full baked in deal, but a 90-day reduction of the trade war, the tariff going back and forth. And like I said, the market's open. Or the market's up big. The investors love this. Okay. I said this on Knowledge Brokers on Friday. If you checked, let me know in the chat if you checked out Knowledge Brokers on Friday. But, after we talked about it, broke everything down here on the hot sheet with Jerome Powell and what he said and stagflation. And I'm like, man, he's really using that word stagflation, and unemployment's not up yet. Say yet because there's some fears. I'm not making a prediction that it will. I'm just saying fears that unemployment would go up. And, I would say that the economy's stagnant, but in Jerome Powell's mind, it's still pretty strong. But I would say only 1 out of the 3 ingredients were there. You had a stagnant economy, but you didn't have unemployment up, and you don't have inflation going up right now. Maybe fears that it will start going back up, but it's generally going down. So I was thinking about this Thursday afternoon after the hot sheet and going into Friday morning's, Knowledge Brokers. I'm like, stagflation. Jerome Powell saying that, it was a warning shot to the administration, to the White House. Like, hey, you don't want to be the administration known for stagflation. Basically, I think unfortunately the Fed is starting to play politics again, like they did when they got Congress to print all that money back in 2021. But I think they're getting a little too political again. That's just my take. That's not a political take. It's just an opinion on, hey, we're not going to cut. We're not going to cut. Stagflation, possibility, whatever. And it might have put pressure on the administration to get some trade deals done sooner. Now, the administration is saying they've been working on these trade deals, and I have no reason to say you haven't been working on them. But all of a sudden you got UK. Now, all of a sudden over the weekend, you get a big announcement, and the market's reacting in a significant, meaningful way. China, that's the biggest trade deal you could do. A lot of analysts, a lot of talking heads said not going to happen until a lot of other deals happen. And this one, probably the biggest market mover that you can have. Maybe that warning shot from Jerome Powell last week says, hey, we want to make sure that we kind of reverse course on this thing, or maybe some of these deals are going to be really good. Obviously that remains to be seen. Here's what I will say. This is a real estate show. This is for real estate professionals. The hot sheet. It's your only 24-hour look back on housing and all the economic factors that impact housing. And this is one of the reason I'm bringing this up. We're not really focused on the real estate market in China, but we are focused on the economic factors that impact North America's real estate market. And this is one of them. So if tariffs made you squeamish, if you didn't like it because you didn't vote for the decision maker on tariffs, or you didn't like it because it brought too much uncertainty, well, now the market feels a little bit more certain. And the market feels like, ooh, things might get good with the deregulation that's gonna happen. Now there's gonna be trade certainty and potential a budget, all this kind of thing. The market's starting to feel more certain today than it's been. And with that certainty, guess what? You may see a 7% 30-year fixed rate today. Okay. So if the tariff talk made you squeamish, fixing trade was not something that you thought needed to happen abruptly. Like the stock market said, hey, we don't like this. We don't want abrupt change. We want stocks that do nothing but go up. Well, now that the stocks are up, guess what people pull out of, 10-year treasury, and you see the 10-year treasury go up. Highest level in 5 days, highest level in the last 30 days. And essentially, the peak level outside of maybe a week or 2 weeks there, about 90 days ago, the highest level in the last 3 months, or one of the top 2 highest levels in the last 3 months. Not as high as, late December, early January, but last 3 months, this is a high watermark on the 10-year treasury. Okay. And we know that the 30-year follows the 10-year. And we know we ended last week at 6.9. We were kind of just bouncing around the high sixes all week last week. And you may see a 7 today. Nobody knows. We'll see what the readings come out today, but you might see a 7. So, hey, more certainty, probably gonna, pour some water on some of the unemployment talk. You get trade deals, you get tariff on, certainty. You got 7 million job openings. The economy probably starts, people start getting away from the R word. All of that's, nobody's rooting for job loss. I'm not rooting for job loss. But you can't have your cake and eat it too. And so you're going to see rates higher for longer. That being said, mortgage demand last week, we saw it. It went up in a higher interest rate environment than we saw a few weeks prior. So, if we just look back here on the mortgage purchase application index, like we've had good weeks this year compared to last year. And we saw it go back up last week, despite, some of the increases on the 30-year. So we'll see what it does this week. But let's switch over to inventory. This is going to be one of those things that helps buyers more than anything, or the thing right now, because 30-year fix isn't going to help them. National single family inventory. It's a big versus last year, especially for the time of year. We're at a higher point right now than we hit it last week than we saw at any point last year. And according to Altos Research, we just got another active single family pop over the last 7 days. It goes from 744,000 to 755,000. So about 756,000 on single family inventory. And last year we had a peak of 739,000. We're 33% more than last year at this point. Again, last year's peak didn't come until October. We should continue to see inventory increase till about then. Maybe it'll start going the other direction in September this year, October, we don't know. But you're going to see inventory increase certainly over the next couple months if it follows any normal trend. And we'll be up over 800,000. It'll be a matter of how high does single family inventory get. Much more normal level this year for the first time in years. Just think back in 2022, before the interest rates shot up, 240,000 that spring was where we were at. Now here at the end of spring, and we're at 755,000. That's 500,000 more homes. And we're only 250,000 behind where we were in 2015. I like to look at 2019 better. And we're 900 something thousand around this time of year. Yeah, 915,000 in 2019. So we're really gaining on single family inventory. I get it. There's a lot of it being driven by the Floridas, the Texases, the Arizonas, the Louisiana, Sun Belt states. But this inventory on the macro is really going to be healthy for optionality for buyers, for downward pressure on price. Price appreciation isn't going to get out of control in this environment when you have more options. New listings helped out a bunch again. 80,000 on new listings. These are you get up over 80,000. This is the first week we've seen new listings get up over 80,000. People are coming to the market. Okay. It'll be interesting to see what happens this week if we hit 7% on the 30-year. Are you going to get as many sellers to come out to the market up over 80,000? This is the time of year we want to get between 80 and 100,000. And are we going to see that if the interest rate, the 30-year fix is at 7+%? A lot of sellers are going to become a buyer. We saw what happened with the lock-in effect. Is the lock-in effect finally waning because life is winning? We'll see. But 80,000, really good number on new listings. It's listing season. Talk to your if you're an agent, talk to your photographer. How backed up are they? Certainly, maybe in the northern states, they're getting backed up right now. Okay, are listings in your market coming out fast and furious? 80,000, highest level we've seen in the last 7 days. With these higher levels of inventory and new listings, new competition coming to the market, we're actually seeing the percent of properties with recent price reductions increase at a level slightly above normal. Okay. Normal would be 33%. We're at 36.7%, 37% of properties. It's almost 4 out of 10 have a recent price reduction before they sell. Okay. It's usually a third. We're almost at 40% now. So it's not nothing. It's something. Homes are taking more to sell. People are going out at their aspirational pricing, quite a bit. And they missed the boat in some markets. The aspirational pricing moment occurred in the rear view mirror, not out in front of you. Total pending home sales, according to Altos Research, ticked down over the week. They got 398,000 versus 393 for the same week last year. So you're seeing kind of a little bit of a downturn. We did see rates move up over the last couple of weeks from where they were. So a little bit of a downturn there. We did get this June pop last year. So be looking to see if that numbers goes back up. We want to get into the 400s here in June before the seasonal and inevitable downside of pending home sales. We're getting into peak season, if it's not potentially already behind us on the pending home sales, on the ability to put homes under contract into escrow. That moment in 2025 is peaking out, and the next peak won't come till 2026, of course. All right, so there's your inventory update. Let us know. Let us know in your market what's going on inventory. Is it following this national trend? Are you seeing new listings accelerate? I'd love to see some conversation here in the live chat on what's going on there in your market. And if inventory is going up, if it feels like, wow, this is happening faster than I ever anticipated it happening, like take a breath, because guess what? Consumers, the people that live in your community, they still believe in real estate. Long term, they believe in real estate more than anything else. It's emotional. Before I jumped on the hot sheet, I keyed up a few of the stocks that I bought after all of the concerns with Liberation Day or the tariff day. Whatever I bought stocks that week. I said, I'm buying stocks. Like, the market's down. This is like awesome for a long-term investor. I'm buying stocks. I'm already selling some of them. So not emotional. I don't care, but people's homes, people authentically want real estate to win because a lot of their life is wrapped up into it. And Gallup's recent poll shows that, hey, stocks, people don't believe that's the best investment. Gold, they believe in it a little bit more in times of uncertainty, and you're seeing gold rising. But you know what? According to Gallup and the research they did, and they do this poll every single year. I love this poll. real estate is still the best investment according to those who are polled. Okay. Real estate, the single best investment according to Gallup. 37% say real estate is the best long-term investment. 23% say it's gold, and 16% say it's stocks. 62% of U.S. adults own stock. That's interesting. I thought that number was lower, but 62% own stock. 59% have a retirement savings plan. Ownership is higher among wealthier, married, more educated, older adults. Yep, we get that. We've known that. Here's the perceptions of the best long-term investment. When you put it on the line graph, like it's not even close. You know, you could put out those percentages and they sound close. When you visually see it, real estate's far and away the single thing people they have their perception around being the best long-term investment. And again, consumers want this to be true. Remember, a lot of stuff's wrapped up into confidence, how people feel about something. If Americans feel like the best long-term investment is real estate, what do you think is going to happen when first-time home buyers are in a situation where they got to make an offer a little bit outside their comfort zone? They're more inclined to do it because, hey, it's the best long-term investment. It's going to go up. Win, baby, win. People want it to be the case, and it is the case. But they're willing to stretch a little bit more because of that desire, because of that belief. If you're going to go on to whatever your favorite stock app is right now, or you're going to call your financial planner today, and you're going to buy Amazon or Meta, it's not that sexy. A lot of people believe while Amazon probably will continue to do well, what am I going to get 10% over the next 4 years? You know, it's not, people want sexy. They want something that can explode. They believe their house can outperform Amazon. And that encourages people to, hey, I can go in here. Now, whether that's going to be true or not, but it motivates a buyer to maybe go outside of the price range. And this is what, it's one of the reasons, this perception, this belief, it's one of the reasons real estate's going to continue to move up. The utility of it, all of those arguments obviously remain true as well. So here's the perception of best long-term investment by income. Okay. And by income, it's important to consider, especially if your business is focused on a potential demo or potential, you know, depending on where you live, a potential town. Real estate less than $50,000, it's actually less than higher earners. Annual household income on less than 50,000, it's only 34% believe real estate is the best long-term investment. Interesting that if you make less than 50,000, you think gold, 27% gold is at its highest level between the three annual household income categories. You got less than 50,000, you got 50,000 to 100, and then you got 100 or more as the three categories. And out of those three categories, less than 50,000 believe it's gold. You know why that's interesting? I just think you have a whole, I think you have, you know, if you have this like fear, maybe mindset at that annual household income. And, you know, the internet's a crazy place. You go on the internet and everybody thinks everything is a conspiracy or a scam or some type of new world order or whatever. And, if I can hoard some gold, you know, all the rich people are out to kill me, whatever, you know, you've heard it all before. It's interesting. Less than 50,000 earners say gold, more so than the other ones. 100 people making $100,000 or more, 41% of them say it's real estate, the best long-term investment, blows the other two categories away. And only 17% have a thought that gold is the best investment. Talk about boring. I mean, gold might be the most boring investment. You don't even have it when you're talking about investing in gold, you're not wearing it around your neck. Oftentimes, you don't even have the physical gold. That's hard to move. I mean, that's what a boring investment gold is, unless you're on the jewelry side of it. But hey, if you make a lot of money, you kind of get it. you understand it. Only 17% say gold's the best investment for $100,000 earners and up. The stock mutual funds jumps up to 21%, right? Less than 50,000, they don't own stock. And if you don't own something, you don't believe in it. Stocks, savings, bonds, 19% on savings for less than 50,000, only 9 for people making over 100,000. Savings, 9% over $100,000 earner or more. Yeah, because you don't get a return you get a return in real estate. You get a return in stocks. Those are the two things people making over 100,000 like. 62%. Stocks, mutual funds, real estate. Real estate making up 41% of best long-term investment. I'm in that camp. I want to buy stocks. I don't want to put money into savings. Why would I want to do that? Here's the stock ownership, 62% right now. This is at a higher level over the last, 30 years or so. And this is kind of where it's peaked out. It dipped down during the financial crisis. This is a higher level than, or at the high mark that we've seen over the last 30 years. So there you go. The bottom line, Americans want their real estate. They feel like it's the best long-term investment. This is consistent year over year. It doesn't change much. Gold and stocks might flip-flop a little bit. But generally speaking, people believe in real estate. It's a great business to be in for those reasons. All right. Speaking of buying some of this real estate, Barbara Corcoran has an opinion on when would be the best time to buy a home. And she thinks you should do it now. Okay. Barbara Corcoran coming out. If you ever seen Shark Tank, she's a little bit of she's kind of an old school thinker, I'd say. If you've watched any Shark Tank, you know what I'm talking about. Like, she believes in people. She's a little bit of a, you might see some of the sharks fighting over the same deal and she's out on it. And then when they all want out, she's in. This is a little bit of a contrarian thought from Barbara. Generally speaking, what you would see in the headlines, maybe not with this group. I think we get it. But people think, oh, real estate's high. I shouldn't buy right now. I should wait. Wait and see what a day like today when the 30-year fix might be up over 7%, when everything else is humming along, stocks and all this. You're waiting for what? But Barbara gets it. Times of uncertainty, those are the times of opportunity. It's like a Warren Buffett type of strategy. Mortgage rates are high right now. They're holding steady. People think, hey, I shouldn't do it. But here's what Barbara says. When things are uncertain, buyers hesitate. Before committing to a new home, they might be worried about the stock market. Maybe not today. Politics, they're always worried about that. A fear-induced doom cycle on both sides of the aisle. They're worried about interest rates. They're going to be worried about interest rates this week. Okay. But when they worry, they hesitate to move, says Corcoran. That makes uncertain markets the best time to buy. You can't be in a deal, have a backup offer, somebody backs out and then your backup offer comes in and you have leverage in the negotiation unless you're in the deal to begin with, unless you're in the negotiation to begin with. If a buyer's truly on the sidelines, waiting for things to get better, when they get better for others, and those others enter the market. So Barbara Corcoran says, hey, what about paying full price? This is the fear. Paying full price, or how about this? Overpaying. Nobody wants to overpay. Geez, how bad would it be if we overpaid? Corcoran tells Realtor.com, I've overpaid for almost every piece of property I bought. Like at the time, she buys in New York City. She's probably right. She buys nice property. She likes nice things. If I like it, I buy it, and I don't live to regret it. She overpaid at the time of purchase and then made a killing on the sale because she doesn't flip them. I'm sure she's done some flips, but if she's living it, if she likes it, she's buying it to own it. And then what happens? What happens is what always happens. Real estate goes up and to the right. Right? What happens is what always happens. It's my favorite chart that I have inside of BAMX. If you remember, or if you've been following the Hashi, you know what I'm talking about, right? I go to the most popular charts in the BAMX classroom, and that's not the one, but I do like this one too. It's this one here. It's home price growth by decade. Real estate goes up and to the right. It just does. It moves up. I mean, look at how few times real estate's actually gone down. I'll show you another example if I can find it real quick. I just was looking at it here this morning, so I'll bring it up. But we're talking about the great financial crisis and maybe one or two other years in which home prices actually go down in the last 50. And, just like, so basically forever, home prices don't go down. Here it is. Check out this. U.S. home price returns since 1942. Here are the returns since 42. Yeah, 07, 8, 9, 10, 11. The great financial crisis, the mortgage crisis, and then in 1990. And so this isn't 50 years. This is like 80 years. Every other year, home price return is positive. Out of 80 years, you had 6, and 5 of them were right in a row because of the great financial crisis, because the entire world almost collapsed. The financial world almost collapsed. So Barbara said, hey, every piece of property I bought, I overpaid for it. I've overpaid for every piece of property I've bought. But if you like it, buy it. And real estate in 10 years figures itself out because it goes up. People believe in it. Gallup just told us that. She says, the way I figured it is if I fall in love with the property and what it is, what it has to offer, I assume there are 3 other people who want to outbid me. So I close the deal and I move on it. Don't be afraid to overpay. It will look like a good deal as the years go by. Yeah, if other people don't want it, you shouldn't buy it. Okay? Like, I don't know. I want to eat in a restaurant that probably Laura, I'll drop it into that chart. I'll just drop into BAMX so you have it on today's under today's hot sheet. So I'll make sure. I don't think it's in there right now. I don't think Vanessa knew I was using it, but I'll drop it into our BAMX school classroom for the hot sheet. So you'll just be able. I know Laura, you're in there, so you'll be able to grab it there. But if I want to eat at a restaurant that other people want to eat at. Like, I want things that are in demand. If nobody wants it, and you might be saying, well, if you like it, you like it. Okay, I get that. It's just not going to be that valuable. Okay. In the future, it's not going to be that valuable if people don't want it. Okay. Like, my wife, we'll be in Connecticut for most of the summer, and she wants to take the girls with her cousin and her kids. They want to do this little camping thing. And she's like, man, all these campsites up there are very expensive. And she's like, she found one that was not that expensive. I'm like, I got concerns about that cabin in the middle of nowhere, in the middle of Rhode Island. Like, I got a little bit of concerns about that, because why is it so much lower than all the other ones? It's going to be a crapper. Okay. Like, I'm not going camping. I got the hot sheet to do, but I don't think it's going to be very desirable. You might want to look at that. Okay. You might want to reconsider. So the upside and the uncertainty that's going on, the 30-year fix, everything that's going on, is the fact that you've got more flexibility in negotiations. Look at what the builders are doing. We see it every single day. All right. So Laura, I'm going to drop just for those that are wondering, hey, where's that chart going to get dropped? It's going to get dropped right. Go to the classroom tab on school. Go to the hot sheet. Go up here to May. Go to today. And you get the replay in there. All the charts that I did today are in there, as well as we're going to drop the one that I just showed. So that'll be getting uploaded here very shortly. Vanessa's probably scrambling on the back end. Where is it? I'm going to send it to Vanessa. We'll get it. And you'll have it up there today. All right. There's your hot sheet here to kick off the week. Again, let's take a look. Just take another look, see if anything changed. 10 years up. I mean, we're 4.44. High peak in the last 3 months on the 10-year, and expect that to have an impact, as it usually does, on the 30-year fix. Probably starting the week at an elevated level. Not ideal, just the reality. It's going to bring uncertainty into the market. Ooh, Barbara just told us what that brings. It brings opportunity. Okay. For anybody coming to the Boston workshop, I think there's maybe one spot left. You can go to bamworkshop.live in Boston. I'll be up there Thursday. Tom Toole and Lisa Chinati. So if you want to get access to that, that's what it is. bamworkshop.live at Lisa Chinati's headquarters. Tomorrow at 9 a.m., members only, doing a live role play. So if you're working through some of these conversations about the market, about the uncertainty, bring the conversation to the role play tomorrow, 9 a.m. Eastern, right before we do the hot sheet. We're doing the live role play for members every Tuesday at 9 a.m. Live role play, members only, inside of school for BAMX members. Live Zoom call. Only members have access to it. We're going to be doing every Tuesday at 9 a.m. for all of May, all of June. Tomorrow, 9 a.m. So I'll see you guys on that before the hot sheet for BAMX members. And then, of course, hot sheet 9:30 Eastern, 6:30 on the West Coast. You know the deal in between. And until then, toodaloo.